Hey everyone, Couch Investor back to another video for today. And today we have a battle, AT&T versus Verizon. If you're from the United States, you probably have a plan at either one of those two. And if you're a dividend investor, you probably have one of the two in your portfolio. Now, if you've been following this channel, we have talked about AT&T in the past. I think it's a great dividend stock. Both of them are paying more than 7% in yield. So quite nice. Both of them have reported earnings this week. One of the two has made its way to my portfolio. Surprise, surprise. Yes, I've talked about adding dividend stocks during a bear market and why it makes sense. You can check that video out. It will be in the top right corner. So this is the state of both companies. AT&T revenues in the last 12 months was $155.32 billion. Verizon just under that, $135.65 billion. Now we go to free cash flow, which is extremely important since both of them are paying quite a nice dividend. So Verizon tops here at $14.34 billion in the last 12 months and AT&T $13 billion as well in the last 12 months. Now, when we talk about return on equity, Verizon is doing here much, much better, 23.66%, and AT&T sits at just under 12%, but improving. Obviously, since they, sold DirecTV, spun off Warner Media, things are starting to be a bit better for the company. Now, we talk about gross profit margin. It's a bit of the same here. AT&T a bit lower, but improving. Verizon a bit better, but decreasing. Same goes for long-term debt. Both of them have, a lot. AT&T $152 billion, Verizon $143 billion. Now, as for a PE, it really is super, super close. Verizon PE for the next 12 months, just under 7x. AT&T 6.7x. So really to choose between both companies, you really have to look at the specifics, which we're going to do in this video. We're going to have a look at both of those earnings reports. I chose out the key points that I want to mention and then explain why I chose one over the other at the end of this video. But before, if you want to support me and this channel, first of all, hit that like button, subscribe if you have not, and maybe check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Make sure to check out all the other links in the pinned comment, some of which might actually save you some money. AT&T. So the company added 964,000 total subscribers, both of those things here together, and maintained its cash flow guidance for the rest of the year. This is very, very important. They say here they provide an attractive dividend, on track for approximately $14 billion in free cash flow in 2022, well in excess of $8 billion annual dividend commitment. Very important to note that if this was not the case, then yes, probably that 7% dividend would not have been safe. So the company added 708,000 total postpaid phone subscriptions during the quarter, bringing its total to 2.2 million through Q3, and added 338,000 fiber subscribers. Why is this important? Because, it beat Verizon by quite a margin, especially for the postpaid phone subscribers. So these are the main numbers. So adjusted EPS of 78 cents on $30 billion in revenue, topping estimates of 61 cents per share and $29.86 billion in sales. Now, mobility revenue for the period was up 6% year over year to $20.3 billion, including equipment revenue of $4.9 billion, thanks to increased sales and mix of higher priced smartphones. But when it comes to wireline revenue, that fell 4.5% year over year to $5.7 billion as demand for legacy voice and data services continued to fall and the company simplified its products portfolio. Also included in the results was $100 million in revenue from intellectual property sales. Now, as for outlook, they're looking at adjusted earnings to be $2.5 or more. That's up from the previous guidance of between $2.42 and $2.46 per share, but that's below the $2.55 per share consensus number. So that was AT&T, and to be honest, this was an excellent quarter for the company. The shares were up close to 10%, which is something you rarely see with AT&T. Now let's have a look at Verizon. So with Verizon, these are the main numbers. So revenue of $34.2 billion, that's up 4% year over year, and a beat of $410 million. Now total wireless service revenue of $18.8 billion, a 10% increase year over year. Total retail postpaid churn of 1.17% and retail postpaid phone churn of 0.92%. And as you can see right here, postpaid phone net addition of just 8,000. So a huge difference between AT&T and Verizon, and that's also why the stock went down hard. Now as for broadband, so the total net addition were 377,000, including 342,000 fixed wireless net addition, representing a strong demand for reliable and high value broadband offerings. Total broadband net addition increased 109,000 from Q2, and fixed wireless net addition increased 86,000 from that same quarter. And here again, when it comes to dividends, so dividends paid year to date in 2022 equal $8.1 billion. Free cash flow equals 12.4. So right now it's still safe. But of course, as you can see, compared to 2021, well, these numbers aren't doing much better. CapEx is up, cash flow from operations is down, free cash flow is down as well, but total debt is down as well. Then net unsecured debt to adjusted EBITDA stayed the same. When it comes to guidance, they're reaffirming their prior guidance, so service and other revenue growth, -1% to flat, total wireless service revenue growth between 8.5 and 9.5%, adjusted EBITDA growth close to flat, adjusted earnings per share between $5.10 and $5.25. But with regards to the increase in CapEx and in order to maintain high cash flow and a high dividend yield, they are working to improve their working capital efficiencies. I believe they're looking to save up to $3 billion by 2025, approximately. And so those were the two companies, the state of the companies right now. Before I reveal which one entered my portfolio, let me know down in the comments below which one you own. Now, I decided to add AT&T. Why? Because I do believe in a comeback story. And after this quarter, I think my conviction is a bit higher as well. I think AT&T has done the right thing. Warner Media put to the side, DirecTV sold off, now fully focus on their core business. And I do believe it's going to pay off. Of course, the 7+% dividend yield is very attractive. Both of them are offering it, so it wasn't really such an easy choice, but thankfully both of them reported earnings this week, made the choice a little bit easier. So AT&T is my second dividend stock in my portfolio. First one is Intel, and yes, also a comeback story. So that will be it for this video. Obviously, do share your thoughts down in the comments below. And again, just because I chose AT&T does not mean that if you're holding Verizon, you are wrong. Both of those companies will still generate a lot of cash flow in the future, will pay great dividend yield for a long time, unless something drastically change. But if you enjoy this type of videos, leave it a thumbs up. And if you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next one. Bye bye.